Guys, I'm going to jump into these charts here in just a minute. Just clear everything out. All right, I love getting a chance to jump onto these mastery sessions because this is really where it's about trying to paint the picture of how to become a master of these markets, right? Whether you're trading Forex, gold, stocks, Bitcoin, whatever you're trading on a chart. For me, my thing's Bitcoin. So I really want to put as much as I can into this hour here to really let you guys know how I see Bitcoin, what Bitcoin is, how to trade it. Because I really feel like to become a master at trading Bitcoin, you really have to know what it is, how it performs, and know what to expect from it and how it's different. That's very much important as well, like to understand what makes Bitcoin a little bit different than any other traditional markets that you may trade. Now, all markets basically will trade the same and have emotion in them, but Bitcoin is a little bit different because of its limited supply and its high utility. Okay, so let's jump into it here in just a minute. Netherlands, Luxembourg, Alabama. All right. All right, so let's just go. All right, so I'm going to start out here with Bitcoin. We're going to look at it first here on the liquid index, BLX. Okay, this is Bitcoin's historical price from the beginning of when it first started here. Now we're going to talk about Bitcoin in two ways that I really want you to understand is that Bitcoin can be viewed as a financial market, but you have to really also consider that Bitcoin is a technology that's becoming adopted as well. So to be able to look at those two things, we have the linear scale, which is this scale right here, which is the way that you would look at all charts, okay, in this linear scale. And then we have the logarithmic scale when you click on the log button right there. And you notice how, I'm going to go to a weekly chart. You notice how these two look quite different, right? When we look at Bitcoin in the logarithmic graph, we can see its performance over the last 10 years, okay, that it went from basically a penny to where it is right now. And we can see the relationship between where it's been and where it's going, potentially. But when we look at it in the linear scale, like the financial market perspective, we don't really see much of a relationship between where it's been and where it's going right now. So I want you to really know that when you're trading Bitcoin, you want to be looking at it in the scale that most people are, right, which is a linear scale. But to keep in the back of your mind, and as like from an investment point of view, and also from a understanding of how Bitcoin grows over time, you want to also be looking at the logarithmic graph, okay, to be looking at the bigger picture. Because when you look at the logarithmic graph, this is where you're looking at Bitcoin not so much as a financial market, but as a network that is growing and is becoming adopted. Okay, so there's two different ways that we're looking at Bitcoin here. A technological adoption, in a sense, and a financial market in a linear scale. Okay, now it's really important to be able to differentiate between the two and to know that that Bitcoin is this technology growing over time, because how it performs over time is going to affect how it's trading, right? Like over all these years that Bitcoin has been going up, it's made large substantial rises, but then strong pullbacks. Okay, nothing else has really gone up in price more than cryptocurrencies in the past with sustained growth. The only thing that we could really compare the growth of these cryptocurrency coins to would be other technologies. Okay, I want to bring up this chart real quick. This is the adoption of technology in the U.S. Like, so every one of these lines, right, is a linear, excuse me, a logarithmic graph of a technology that became adopted. Okay, so you can't forget this when you're thinking about, all right, what is this Bitcoin? Is it important? Is it going to go away? You know, is it stupid? Is it going to be great? Is it going to go to zero? The one thing you want to consider is that what Bitcoin is. It's more than just a payment system. It's more than just a way to get into these altcoins. It is a storage of value, and it's the first. And it's like digital real estate at this point. So what Bitcoin does as a storage of value is and cryptocurrency technologies, by putting things on the blockchain, it decentralizes processes in like our everyday life, right? We have trust mechanisms in place. When we go to a lawyer to record, the purchase of a home, or you want to sell something, or there's different things that we rely on, like ordering companies to order things for us, and like someone in the middle to do inventory, and all these things like rely on third-party trust systems. Blockchain systems can decentralize a lot of those trust mechanisms that we have, that we've built society on, to kind of create more of an autonomous, like where things are just kind of flowing more productively over time. So we're heading into a digital future, and Bitcoin and blockchain technology serves such an advancement to be able to work in that digital realm that cryptocurrency is needed. It is the layer that has been built on top of the internet. I mean, think about the internet. I'm old enough to remember there being no internet. And I remember when the internet first came out, people thought that it was just used by criminals, and that it was, there's a news article I photo, like I screenshotted, that I saw on Twitter like not that long ago, where it was like from 1993, like major news outlets saying that the internet was probably a fad and it was going to go away. So it's like you have to really know like what's going on with these things that are changing our lives, and tune out to like the mainstream outlets and the mainstream like wheelhouse. In a sense, it's all the same, right? It's all the same propaganda that they're feeding you from all these different channels, but they don't really know what is hitting them right now. Like they're just adapting to it now. Like, so Bitcoin's been something that's been living outside of that traditional system, right? Outside of that wheelhouse for so long, and now it's coming in and becoming adopted, right? It's becoming normal. More and more people are accepting it. So as Bitcoin does that, and the fact that it's limited in supply, we have to remember that we're not just talking about something that's a financial market. We're talking about the adoption of a technology that's happening during these decades of our lifetime. Like I feel like 50, 100 years from now, they're going to be writing history about this time period, that there was a large transfer of wealth when wealth went digital, in a sense. Like people used to store value in gold and stuff like that. Like you can't, there's so many things that you can't do with gold that you can do with cryptocurrencies. And the amount of money that is in the gold market, if that much money were to come in the cryptocurrency market, it would push the price of Bitcoin to $500,000 because of the amount of supply of Bitcoin. So the thing you can't ever forget here is that we're talking about the first time, like in history ever, that we've had the combination of technology and finance and had a chance to get a piece of it. So it's very life-changing type of like environment that we're living in right now with the adoption of cryptocurrency, because it's creating so much opportunity for people globally, banking the unbanked. I mean, just for instance, what happened in El Salvador right now, they made it their legal currency, right? The first major articles that we're seeing pop up out of that are that Western Union's going to lose $400 million this year to remittances that aren't going to be sent. Boom. One trust mechanism eliminated from our society. Like Western Union's days are limited. MoneyGram, their days are limited. Those are old technologies of people that would take 13% of your money. You send $100, they're going to take $13. They're going to take $15 and call it normal. Take 13 and call it a holiday sale. Like, so you can do those kind of transactions now, like sending an email. Like, so this is an adoption of like a leap forward in our capabilities to communicate with each other, to interact with each other, to do business with each other, to be able to exchange value with each other. And all sorts of layers are being built on top of that now with DeFi and NFTs. And I mean, Pandora's box has been opened and it's not going to get closed. So you have to realize that there's a shift happening right now into this digital, into cryptocurrency. I've been aware of this since 2013. I bought my first Bitcoin in 2013, and I thought I was a genius and that it was going to change the world. But then I went through the cycle that I'm going to share with you today, and I want you to realize that like the whole picture of trading Bitcoin, okay? It is a technology that's going to, by default, continue to become adopted or fail. There's really no in between at this point with Bitcoin, okay? Either it's going to be adopted and it's going to become the world's global reserve currency until something else, people want to put their value in something else. But shifting in that way now, yeah, Ethereum's great. But Ethereum's more like a transactional cryptocurrency to build layers on, to do more transactions and to create more something out of nothing, right? Like, but Bitcoin's more like a storage of value. Okay, like so as we go into that shift, it's it's going to go through cycles. But the thing we want to realize is that knowing the way that technology has performed in the past with adoption, knowing the way that financial markets work, we can see there's only it's either going to continue to become adopted or fail. And what I mean when I say fail is that I really feel like Bitcoin as the experiment. This is a great, huge social economical experiment that we're witnessing right now. That seems like it's sticking and going to become part of history. Now, 8 years ago, people, I talk about it here and there, and people are just like, whatever, I don't even know what you're talking about. It's used by criminals and it's bad. Or, then 4 years ago, oh, it's a little bit of a craze and a bubble. A lot of people got it at the wrong time and lost money. Now, this cycle, it's becoming more an everyday household word, right? Like Bitcoin's not a foreign word anymore. You read about newspaper, you watch the Netflix series, they're talking about it. It's becoming more and more common. Now, for all these things to fall into place for it to become the global reserve currency, it has to continue becoming adopted. Now, as we see that happen, like I said, it's either going to happen and all the dominoes are going to fall into place, or it's going to fail. And the way that we would notice that it would fail would be the network itself, right? The growth of the Bitcoin network would look unhealthy. Okay, this is the biggest thing to remember when you're studying Bitcoin, when you're trading Bitcoin. The news don't matter. All right, like I'm not going to sit here and go through a million news folders and who's going to say what and what speech or whatever. Because at the end of the day, it's only going to have a small little impact on maybe some price action. But in reality, those fundamental elements of everyday other markets don't really apply to Bitcoin that much. I hate to say it, but I've been trading this market as my own, like for a long time. It lives outside of the traditional systems, and it doesn't care. You can't make rules and regulate it only so much. It'd be putting like a fence up in the middle of a field. Like people are going to go around it. Innovation is going to go elsewhere. It lives on the internet. You'd have to shut the internet off to destroy Bitcoin. It's not going away. It's like a virus that has been spread. It's like a black hole that is sucking everything else into it. Now, when I say sucking everything else into it, I mean global wealth. It's sucking into it. The the gold market, the stock market, the bond market, the debt market. I mean, all of it, like all the global wealth that's in all these other markets, they don't perform as well, and they're old, broken systems. So Bitcoin is this own system that has the potential to completely disrupt everything. So people now, we're at the point now, like this, just the tip of the iceberg in a sense, where it's starting to show, and we're starting to really see things fall, where corporations are putting it on their balance sheet. Large corporations, everyday people are trying to integrate their systems into it. Countries are legalizing it, are going to have the reserves in it. So this is the beginning, right? This is the beginning of something. And now the traditional systems that want to try to remain relevant, right? They have no other choice right now but to adapt. And some of them will survive within kind of like the bridge mode, right? But some of them are going to become irrelevant, like Western Union, MoneyGram, money remittance through third party like mechanisms or corporations is gone. I mean, that like when I first found out about Bitcoin, I knew that those days were numbered for those type of businesses. And now we're starting to see like, I mean, if you look at Western Union's chart right now, if you look at their stock, it reflects that as well. So it's kind of like things are shifting, right? And the traditional systems that want to survive, they're going to have to adapt. That's why we're seeing Visa merging and trying to do these different things, and we're seeing every single bank trying to offer it to their clients and stuff like that, because we are at a, a crossroads in time, I would say, where there's still a need for a bridge to cryptocurrency. All right, this conversation is going to get a little bit deep, but I want you to really understand like what we're dealing with here, because it's very impactful. Like, we're going to look back on this, like I said, and we're living in history when it's happening right now. Like one of the biggest shifts of wealth since the Industrial Revolution, if not bigger. Okay, so as this happens at this crossroads in time right now, we're at a point in time where, like, I'm 45 years old and I get Bitcoin, but I'm on the cusp. Like, people 10, 15 years older than me, they can't totally digest it, and they can't totally, not as many people older than me get it as the people younger than me get it. Let's just put it that way. Like, the people that were born into the internet, people that are born into social media, right? They get it, okay? But there's still a point in time where there's still a large amount of our society that is older than me that doesn't quite get it yet, right? So we're at that bridge, that crossroads in time, where there is, for these banks to become, to stay relevant, for these Visa cards and these credit card systems to still become relevant at this point in time, they're going to have to bridge, because not every person wants to be their own bank with Bitcoin. Now, if you're born into the internet and social media, it's easier for you to download a wallet and just accept some Bitcoin and learn how to send it than it is to go to a bank and set up an account. But if you're already in the system and you're older, it's easier for you to just deal with the bank and don't even care about this wallet thing and sending your crypto to the wrong place and it being lost forever, right? Because with cryptocurrency comes great responsibility, right? You are your own bank. You're in charge of it. If you send it to the wrong place, it's gone forever. There's no 1-800 Bitcoin, 1-800 Ethereum, help me customer service. It doesn't exist. But for the older generation, they don't necessarily feel comfortable with that. That's where the banks and all these little cards and things are going to still have their little, like I say, life raft of this bridge for maybe another decade or so, where they integrate it into people's everyday lives through custodial systems, right? So these banks are buying up Bitcoin so that they can offer derivatives and custodial solutions to and exposure to their clients. Okay, but you don't need the banks to get into Bitcoin. You don't need Visa card to accept your cryptocurrency so you can use your Visa card. Like, you understand what I'm saying? Like, Bitcoin lives outside of all that, and now it's just plowing through time, and the traditional systems are just adapting and creating these bridges. But in the end of the day, 10 years from now, people are going to realize they don't need them, because more and more people are accustomed to just living with a Bitcoin world, right? And that's what we call the adoption of technology, right? The adoption of something that goes from not many people using it to it's just common. And I would say that we are at the point where, man, we're probably about 40%, maybe closer to 50% now at this point of adoption. So Bitcoin's at a point in time where we're seeing things fall into place. Companies, corporations, and countries. Okay. Now, as that happens, right? As that happens, we want to realize that this is what we have, this opportunity with Bitcoin, just by holding it. We could talk about trading it in the next entry in the second, whatever, swinging it, scalping it, whatever. But you have to understand, like, well, all of that should be really to stack more Bitcoin. Like, if you're a smart investor in this and you've been trading for the last couple of years, your goal should have been to trade, make profits, stack more Bitcoin. Trade, make profits, stack more Bitcoin. Because over the long period of time, Bitcoin has been the highest performing asset class of all time. And we know that everybody's starting to figure that out. Now, that's where it's at the point where it's either going to fulfill the destiny and the prophecy, or it's going to fail. Now, we would see some sort of signs of failure if the network didn't look healthy. And this is the biggest thing to really understand here before we look into the financial market chart, is that for Bitcoin to not continue to go up, it has to look unhealthy. Okay? Because what we're talking about is the growth of a living organism, really, like any of these things on a chart and a graph that have people consuming them and using them. It's all like growing like a living organism. So Bitcoin is also doing that. It is growing over time. And a lot of Bitcoin's growth and new price discovery has a lot to do with the mechanism of the mining reward getting cut in half. Now that's a whole nother conversation that would last too long, but just know that the supply that comes into creation every 4 years gets cut in half. So the miners that sustain the network, for them to do so, it has to be profitable, or otherwise they're wasting their time. So when that happens and the mining reward that they get gets cut in half, it's like a supply shock in a sense. It's like a shock of, man, they're getting less. So the only thing that can happen is it could fail and continue to go down and nobody wants to play the game anymore, or go through new price discovery. So basically every 4 years, Bitcoin pushes itself to the point of death or renewal. And what I mean by that is like when it goes through the bear market and the prices drop so significantly from the peak of euphoria that it gets to a point where the miners are not making as much money as they did before, and they know that they're going to get less at a predetermined date and time, and there's no avoiding that. It's programmed. So they either have to get out or speculate for higher prices. So if all the miners get off the network because it's not profitable, then the price is going to continue to go down and it's going to get abandoned. So Bitcoin's a very interesting invention, the technology that it is, how it's the first combination of finance and technology, and it was very well thought out that way, because all of these technologies here that changed our life, we never had a chance to own a limited piece of it. There was not limited pieces of microwave technology that you needed certain keys to use, and the more people use microwaves, the more your keys increased in value. Think about that. The more cell phones that people used, you didn't have a chance to make money. Every single time you saw a person with a cell phone, you knew your cell phone keys were going up in value. No, you could make money in those industries by investing in companies and in the technology, but you couldn't own a piece of that underlying technology. By owning Bitcoin, we are owning a piece of the underlying technology that is printing the future here, digital real estate. Okay, so the technology is becoming adopted. It's happening faster and faster. And for it to be sustained, we would see the continuation of the health of the network. Okay. Now this is like laying the groundwork here for what I want to show you next, is that when we look at the network, okay, like I said, for me, there's no fundamental news folders and what, she's saying and he's saying and what the speaker's saying today with Bitcoin. To me, it's pretty much irrelevant. The fundamentals for Bitcoin for me is what's happening on chain. And what I mean by on chain is, remember, this is blockchain technology. So every transaction that happens on the network is visible. You can study it. You can analyze it. There's tools now to analyze the movement of the coins on the network. And that gives us a lot of fundamental information to the health of the network. Okay, and the two charts I want to share today, mostly these two, that here, this is Bitcoin's hold waves. So basically, it's hit a point here where it's at 93%. And what this is really showing is that more or less in the last month, 93% of Bitcoin has not moved, hasn't moved. So it's just, it's not even in circulation to be traded. Okay, so if you know like the supply and demand dynamics, like when there's a demand for something, if there's not enough supply of it, the price is going to go up. Okay, like it's just simple laws of supply and demand. I mean, if there's a limited supply and a huge demand, there's not enough to go around, so the price of it will go up. It doesn't matter if it's whatever it is. I mean, if there's a demand for it and there's not that many, it has value, right? So what we're seeing here is that 93% of Bitcoin in circulation hasn't even moved in over a month. So this is showing that a lot of people are just holding. They're not interested in selling at these prices. Okay, the next one here. This is the reserve of coins on exchanges. So if we see an increase, all right, in the amount of like money going into exchanges, then that means people are sending their money, their Bitcoin, all right, they're sending their Bitcoin to the exchanges to sell, to trade it, whatever. But what we're actually seeing now is the opposite. All right, we're seeing the opposite where it's actually hitting like lows for the last couple months. Actually, I think these are new lows. Yeah, these are new lows of the reserve that's held on the exchanges. So what that's painting the picture of is saying, okay, well, forget about what the price action is for right now. Yeah, Bitcoin fell down from 53 down to 44. Ooh, it looked ugly. A lot of people probably think it's dead. It's the beginning of a bear market, whatever. But the things you have to consider is that, all right, well, how's it look like on chain? What's happening on chain? Like as this happens, are we seeing, as this sell-off happens in price, are we seeing people send a bunch of coins to the exchanges to get out of Bitcoin? No, we're seeing the opposite. We're seeing coins move off of exchanges. We're at not only coins are moving off of exchanges, but they're moving off of exchanges at such a rapid rate that the supply left on the exchange to be traded is at all-time lows. This is what we call supply shock. Okay, so Bitcoin is getting to the point where people are holding, people are adopting this, and the amount of Bitcoin left to go around is shrinking and shrinking and shrinking. Okay, now all of this is fundamentally happening while we see the price action. Okay, and that's where the chart comes in handy. Okay, now when we look at the chart and we study it, I'm going to stay in the logarithmic view for a minute because I want to talk about the health of the network. Now, Bitcoin as it unfolds, just like anything else in creation, more or less, in its growth, all things in creation, okay, once they grow past the golden ratio is such a fundamental layer of growth. It's like a notch in the belt of growth. Or if you're thinking about a plant growing, it's like where it forms a node and then continues to grow. Like in all things in life, there's Fibonacci. Okay, and it's everywhere. It's in, I mean, I got videos just that are hours long just on Fibonacci and how it's everywhere. But just know that it's in the markets, it's in us, all the way down to our DNA, and it's in the I feel like the way it works in the market the most is that the market is running on an expression of human emotion, of fear and greed. Fear and greed is just flowing through the market, and then in every single market. But with Bitcoin, we have utility sustaining it, right? And like long-term vision of what this could be sustaining it. But there's still fear and greed running through the market that's painting the charts, just like every other market. Well, that is an expression of our human emotion, right? And Fibonacci is within us as well. So anything that has some sort of a system of growth and decline is going to have some sort of laws of mathematics that it abides to. Now, these are things that existed before mankind even discovered them. Like we didn't invent mathematics, we discovered it. So we have to really think about like the Fibonacci be almost like a harmonic blueprint of life. It's everywhere. So here with Bitcoin, as Bitcoin grows past its previous high, so look, let's just run through this real quick before I do that. So Bitcoin runs up crazy, makes a high, and then retraces about 90%, right? It goes through the bear market. Once it goes through new price discovery from the mining reward happening and go through new price discovery, in its growth, it has to put that notch in there of the 1.618, and then it continues. And if you look, every time Bitcoin does that, even on the next bear market, it never challenges that 1.618. So there can be a case to be made that when Bitcoin is going through price discovery past its previous cycle high to a new one, after it crosses that 1.618 golden ratio, it never falls below that price ever again. And that has a lot to do with my theory of how Bitcoin should never go below these lows of 28 or like 28, 5, 29. It should never go that low again, ever. I know it sounds crazy to make that statement, but if Bitcoin continues to grow, remember, it's not just that financial market that we're trading. We're trading a technology that's becoming adopted. So there's certain principles that and boundaries, right, that exist in the normal financial markets that Bitcoin does not abide to. It only abides to certain financial market trading rules, let's say, only so much. And at the end of the day, it's just going to defy logic and continue to grow. But the thing is that we notice it in such a profound way because it has a dollar price attached to it. All right, think about that. We notice Bitcoin's growth in such a profound way because it has a dollar price attached to it. Because when cell phones were adopted and social media was adopted, it was like, yeah, more and more you can see more and more people using it. No, it's just kind of like, now it's an everyday thing. But it wasn't like going through these waves of shock and awe along the way that you even cared about because it didn't have a dollar price attached to it, right? So Bitcoin, like its growth is just like the growth of Instagram, the growth of Twitter, any of these things that are just common now, right? It's the same. It's the same deal, but it has a dollar price attached to it. That's what makes it different. And Bitcoin and cryptocurrencies are the only things ever in existence before, like they're the first things in existence to be like that. Because before it was like, yeah, there's technologies. All right, well, how do we get into that? How do we blend a financial market with that? Oh, this telecom company is doing this. Maybe their stock's good. Their CEOs from this, blah blah blah, whatever. Now that's we have a combination of this technology and a financial market. So the more this thing becomes adopted and grows, by default, it will go up in price. That's why I say Bitcoin is either going to fail or it's going to go to astounding prices in the future. Now, if you look at this, every single one of these points in time where it basically made the golden rate, grew past its golden ratio, let's just say, all right? It spent some time around there, but then it continued its journey. And then here, and then it continued its journey as well. And then here, and I'm expecting this thing to continue its journey as well. Now, we have to look, and I think that Bitcoin could go into the multiple six figures, honestly. And it could happen a lot faster than anybody expect. But the thing is that if Bitcoin continues to move in the cycles that it does, you want to understand where you're at in the financial market perspective. Yeah, we're in this great wave of adoption and people, it's becoming mainstream. But where are we at in the financial market perspective is very important because when I bought my first Bitcoin, okay, it was back here, just after it cost $1,000. I bought my first Bitcoin here, but like a little bit over $1,000, and then it went to 1166 after that, and then it went all the way down to 166 afterwards. So if I say to people I bought my first Bitcoin at like a little over $1,000, they'll be like, "Man, you're so lucky." Wow. But there's another side of that story that when I bought my first Bitcoin here, for a year and a half, it was, if not more, it was at a loss. And the point that I watched it go from 1100 all the way down to about 200, and had to live through that cycle of emotion. All right, because that's really what runs these markets, and that's what we're going to get into next. Now, but the point being is that every time that Bitcoin makes this, this feeling where you're a genius and it's the greatest thing you ever heard of, there's going to be another side of the market that comes. And so we want to prepare ourselves for that, even though I feel like Bitcoin's going to probably run up into the multiple six figures, maybe even by like January or February. It's not going to sustain there it'll probably spend another year after that just chopping its way back down to 45 or 50 again. So the market's setting itself up through these impulses of growth and decline and growth and decline and growth and decline and growth and decline. Now, but as we can see that each one of these cycles, okay, has a way that it's flowing a long time and what it's doing with Fibonacci as it grows. So if Bitcoin is going to continue to grow and become adopted and be healthy as a network, I would expect it to never fall below the golden ratio ever again. And if it does fall below the golden ratio and sustain price below there for a couple weeks and show that that level of support is then resistance, then that would be a sign that there's something wrong with the network. There's something wrong with Bitcoin's adoption, and maybe people don't want it as much, or people aren't interested in it anymore, or something, because that would be evidence that it's not growing naturally anymore. It's not growing according to the way that it could unfold here to its full potential. It's losing key, not only support levels, but levels of just, I would say, naturally defined levels of growth in that sense, like for it to lose that level. Okay. So that would be like the first thing to realize, that if it goes below these levels, then there's something maybe wrong with Bitcoin. But we don't see that. We see the opposite, right? We see that it held that level after multiple tests, and the amount of coins on the exchanges are drying up. People are holding more. People are not interested in selling at these prices. So that is what the kind of thing that could lead to another boom, large impulsive rise that would lead into the euphoric state of the market. Okay, so just to before we get off of the logarithmic, I'm looking at the peak of euphoria, right, down to the bottom of depression, and the peak of euphoria down to the bottom of depression, and the peak of euphoria down to the bottoms of depression. We're making a wave that should peak in euphoria, I think somewhere like up here, and then make a another wave of depression down towards the 50-60 levels sometime into 2023. Okay, as this thing continues to flow in this model. Now this is also, if you look at this and you Google search stock to flow model for Bitcoin, it also shows how it should continue to, just off of the known supply of Bitcoin and the known fact of how much Bitcoin there will be in the future, because it doesn't get inflated over time. It actually gets deflationary over time, like the amount that comes into creation. So we know if it follows this model that it could get well higher up in here. So this is most likely one of Bitcoin's just normal cycles of adoption. Okay, but we're not. I don't feel like we're there yet to the peaks of euphoria. Okay, peaks of euphoria show people sending their coins to exchanges, trying to get out of them, trying to sell into that top. Looks to me like we're about mid-cycle, like about here in 2013. Okay, we're about this point, just like I said, off of that golden ratio, where we're continuing to grow now. But I really wanted to mark out these levels and peaks of euphoria and depression here on the logarithmic chart, because now when we switch over to the linear graph, it's going to look completely different. Okay, like you're not even going to be able to tell that Bitcoin went 258,000% and then dropped down 90%. You're not even going to be able to tell that when I switch off of the logarithmic graph. Okay, look, all of that stuff that happened in the past is just a flat line. Let me just hide my tools real quick. Look, it's a flat line. Let's hide that 50 EMA. You don't even see that cycle, right? So you have to consider Bitcoin in those two perspectives, right? How's everybody else looking at like the financial market? But what is Bitcoin really? And how is it growing in the logarithmic view? Okay, now let me put my tools back on here now, and let's look at this now, each individual cycle. Okay, those peaks of euphoria, right, that came down to those bottoms of depression. This was the price discovery of Bitcoin as it went over a course of time. These cycles play out over like between like the beginning of one and the full end, the bottom of one. It usually takes about 3.5 or 4 years. So we're about a couple years into Bitcoin cycle, where I feel like we may only have 4 or 5 months left of large growth before the cycle rolls over and it finishes. But look, if we look at each one of these, right, from the peak of here to the bottom, and then we look at the next one over here. Okay, we're looking at the same thing, right? Let's move this down here from the peak down to here, and then we look at the next one that came in 2017. Same thing, right? From the peak down to here. Those were the measurements that I was taking my Fibonacci measuring, right? So I was literally measuring the top of the cycle to the bottom of the cycle, showing that when a new cycle begins and it crosses that golden ratio and puts it into support, it should continue to grow. All right, but there's one common theme here between all of these previous peaks to bottoms, right? What's the common theme for all of them? What is the market doing over a couple year period of time? Now, in the logarithmic growth, right, perspective, we're seeing substantial growth, right? Bitcoin, the highest performing asset class of all time, just almost looks like it's been going straight up over the last 10 years. But here's where it makes these crazy runs up and then pulls back, 85% and just wipes people out. So this is the financial market perspective that Bitcoin is doing. This is what it's painting in the charts through our emotions of fear and greed as it's becoming adopted, as it's making new waves of price discovery. It is playing out the traditional, classic emotional market cycle, the Wall Street cheat sheet. This cycle, this chart was not made for Bitcoin. This is the Wall Street cheat sheet. The point being, though, is that this is like the tide of all markets. All markets have the tide and the impulse of greed and the waves of fear and the anxiety, the doubt, the anger, the depression. All of these emotions are felt in the market. Bitcoin is just really good at bringing out the emotions of the traders in such a parabolic way because I'd say Bitcoin, the fact that Bitcoin is so disruptive and the fact that it's limited supply is why and the mining reward schedules, how it gets cut in half every 4 years, the supplies the new supply, it kind of creates this wave of death or renewal, and it goes through renewal and it creates new price discovery, and the human emotions of the traders chases it, and it creates the classic market structure over and over again, but still produces overall growth over time. Okay, this is why I said, if we run up to the multiple six figures, it's gonna most likely look something like this coming, and people aren't realizing that this is probably going to come after it. So all the people that have been sitting on the sidelines, think about it, if Bitcoin breaks its previous high of 64 and starts running towards 100 and breaks 100, so many people are going to chase that thing thinking it's going to $1 million, and they're going to get in the peak of euphoria, right? Feel like a complete genius, like I did in 2013, right? I'm a genius. I'm going to be rich. It's the greatest invention ever. Bitcoin's going to change the world. And I was right, but my timing on investing in Bitcoin was wrong. I had to get drugged through the cycle to understand that this is why, and this is the foundation of all of my trading, honestly, is that I realized through this experience with Bitcoin what was missing in all of my trading previously. Because before I found Bitcoin, I used to trade stocks, Forex, gold, silver, whatever, you know what I mean? Like traditional markets. And there was something missing in my trading, and that was the fact that I didn't understand at that point in time that all of the markets move like this. The market is designed to move in the way for the maximum amount of pain for the most amount of people. Statistically, 70% of people fail at trading. So there's one consistent thing in that, is that the loss is the most consistent thing in the market. And if you study where the loss happens, you learn how to win. And if you realize why the loss is happening, then you win even more. Because the reason the loss is happening in all of the markets is because the participants are making decisions based on emotional reactions to price. And that's what paints the charts. All right. In Bitcoin, it's even more profound. So it was kind of like a big light bulb went on. I realized that, man, Bitcoin moves in these emotional market cycles. All markets do. That's what's been missing. Markets lean towards loss. Look for the loss. Look for the manipulation. Look for the spot where most people are going to lose the money, and that's where the winning trades are. But Bitcoin, and you could play that strategy in a 5-minute chart, but Bitcoin's playing this out over long periods of time, where it's making parabolic rises. Okay, so what's happening with Bitcoin here is that right now, as we made our highs over here and we come down here, this is where the market starts to look a little questionable, right? People start to think, okay, is it bearish? Are we gonna come down here? Is Bitcoin gonna create one of these cycles? Now, that's a valid, let's say, observation that Bitcoin could be looking like it wants to create one of these cycles now. But according to the larger blueprint of Bitcoin, for it to go below these prices, the way that Bitcoin grows would be altered. Now, this is really only you could apply this logic to Bitcoin because of its limited supply and its high utility, and the fact that right here at this point in time, people are not trying to give up their coins. They're collecting more. Actually, when we analyze the sell-off that happened over this last week, it was a majority of liquidations of over-leveraged margin traders and a lot of orders that got filled for those, like a lot of people that bought that sell-off were addresses that already had more than 1,000 coins. So think about that. All of this sell-off that happened, the majority of all those coins were tracked to go to addresses that already had 1,000 or more coins. So the whales just bought the dip. They just scared out, liquidated the margin traders, actually DDoS'd all the exchanges in the network to give a direct denial of service, filled their coins, and now we're seeing these coins go off the exchanges, and what I feel like we're gearing up for another wave. Okay, now let's get into this intraday price action here, and let me switch over to Bitstamp. All right, and let's look more like on a daily here. I really wanted to lay the foundation of, what is Bitcoin on the bigger picture, the technology, how should this thing perform, what are these key levels, why they should stick, why they should hold, and what is Bitcoin more likely to do here if it's going to perform like it has in the past and continue to become adopted and people want these coins, then what's the most likely outcome of this situation here? Is it this, or is it some sort of move like this? Okay, I believe it's more like this, more like some sort of move like this. Now, I said on my last Go Live session that probably sometime in about, let's just say, probably sometime in October, everybody's going to be talking about the cup and handle that's forming on Bitcoin. And what I mean by that is that understanding market structure, you start to see things way before they form. And so if this thing is going to hold any kind of retracement in these levels in here and turn itself around, then it's going to run back up to an area. Call this just like a little deviation, but more or less like this, where people are going to be looking at this as some sort of a cup and handle on Bitcoin. So I would, and that's good because that means that a lot of people are looking for the resolution for this thing to manifest that pop out of there, and that's where the retail traders come in. I don't trade retail patterns. I'm more so like try to consider them my analysis to hope that I can expect to maybe hope that see that coming, right? So if I'm buying the dip here and then we get up here in October and people start talking about cup and handle, I'm like, yeah, okay, cool. Now we see the retail push the fence, right? We see them push it over and push us forward. Not where I'm trying to, buy the breakout, okay? But you want to be able to think like this is the biggest thing about trading. Like all the fundamental stuff, okay, that was like the beginning of the session. I'm going to wrap it up with this like trader mentality, trader logic, like how to understand like how to enter this market and what more or less what to expect from it. Because you want to be able to realize that in trading, especially trading in Bitcoin, there's really nothing new under the sun, right? The market's only going to do so many different things. And if you realize that from trading it from a long time, that there's only like the structure starts to look the same, the Fibonacci relationships look the same, the respective moving averages look the same, the harmonic patterns that it prints look the same. So you start to see the same things over and over again. You do this with enough time, you start to realize that you start thinking about the market like a game of chess, where your opponent is the market, and there's only so many moves that your opponent's going to make, and you're thinking in your head already like 2, 3, 4, 5 steps ahead. That's how you become a master of the market. To think ahead of the market like a game of chess. What is the like thinking about what moves is the market going to make, and how are you going to prepare for them? How are you going to react to them? Okay, that's really where you get your game on. All right, because then you start to see things play out the way that you expected and know the move to move on and take the move. Okay, so let's just do a quick summary analysis of Bitcoin here and why it looks like we should hold, the mid zone. Let's just call it. We'll just call it mid range. Let's just throw a 50 in there. I don't really even think we're going to go down that far, but we could. Let's just put it that way. But we should hold the mid range at the end of the day, which would be like here. Okay. Now there's a good case to be made that the bottom is maybe already in, but the way that markets work, especially, let's throw our 38 in there actually as well. Okay. So right now we're more or less holding this 38% retracement, right? Now, there's a couple things I want to consider here as far as where this is, where it has bounced right now and what it could do. So right now, it basically made equal lows with this low right there. Okay, so we have like equal lows with that right here at the top of this resistance right here before it really broke down. So we're holding kind of like this low point, which is right above that high point from that first wave right there. So, but these are equal lows. So that's very notable that these are equal lows. But the thing is that when we look at a trending market, right, when the market makes impulses, waves up, and then it makes corrections, right, that can be quite often looked at as an Elliott wave structure or some sort of impulse and retrace or corrective structure, right? Just meaning that there's an upward thrust to the market, and then there's some sort of part of the market that just kind of chills out, corrects, chops around, consolidates, and then can continue to impulse again in green. Okay, so that market goes through this, right? Like impulse, and a lot of the time with that impulsive behavior, we'll see, like Elliott wave structure, big waves like this, and then we'll see retracement, corrective structure, stuff like this, and other impulses like that. So you want to just know that the market is continually doing the same impulsive and retrace, right? So it just made a large sell-off right here. So we're not expecting this thing to just go to the moon overnight. There's probably some sort of, I would say at least an 80% chance that there's some sort of corrective structure that needs to happen in here. So some time needs to pass. Some sort of, handle needs to form, let's say, on the cup and handle pattern, right? It needs time to create these things and then show the world that it's ready to pop and break out. So there's time. The point I'm trying to make here, time that has to play out here. A lot of the time, these corrections will make A, B, C corrections. Now, that being the case is that I would look at it like this. Over the next month or so, we really want to see Bitcoin hold basically that low that it made and this entire zone right here to like 41. Okay, I could say going to 41 would be legit because we could get some sort of, we got to push here. Now we're consolidating. The market wants to try to make its way back up, and it will probably do so. We may see this next week create some sort of a move back towards, let's say, 78.6% back up at the most, 61 to 78%. So let's just say in this zone, right here, this previous tops, right? Top of that consolidation. If Bitcoin gets on any kind of rally in this next week, it's most likely going to meet resistance in this zone because that's the way corrections happen. Now, if it doesn't and it blasts through it, right, and turns this into support, then that's notable too. Then we see that happening and say, oh man, this is support where it was resistance right here. Doesn't look like it's retracing more. We jump in here and we try to ride it up. But for now, it looks like the market has some work to do. Okay. Now, most likely outcome here will be that the market comes up here, meets some sort of resistance, gets everybody bullish about Bitcoin again, trails out, and then sweeps those lows over here, creates maximum loss for anybody that bought it in the last month. People question it, comes down here, and then it takes off. And then it gives that pretty cup and handle. Okay, now that's really what I'd be looking for. A lot of this also has to do with some of my deeper studies of like human emotion in the markets and how the fact that Mercury retrograde basically started to show its pre-shadow here, and it's not over until sometime in October, more or less like over here, meaning that just the influence of Mercury like retrograde in a sense has a lot of effect on human emotion, confusion, doubt, insecurity, whatever. It's like it takes human emotions on a trip. And we're going to experience that in the market. It has an effect on the market. We're going to experience that for like the next month, which would make sense that we would see that correction happen now. So let's consider another thing into it, like time, right? I'll give a little. I'm going to try to finish this up relatively quick, respect everybody's time, but let's just look at impulsive moves here, right? Here to here, before it actually turned around and went, right? Let's look at Fibonacci in time. If we look at that where it started, right, to where it stopped, and we look at, right, basically right there, rolled over, and right here's where it broke out. Okay, if we look, we can see that here's where the market put on a top, but it wasn't really until over here at like this 1.414 or this 1.618 that the market really decided it wanted to turn around. And all of this in between was just like the A, B, C correction, right? So I could pull apart many impulsive and retracement waves that do the same, that they give a correction that plays out over time of Fibonacci. All right. Now, if we look at this one here, and we look at right here where it broke out, basically to where it rolled over right there, we can see some levels, all right, or moments in time, right? Now the 1.13, I have this one here for right now, but it's not as important to me. I really like these three, the 1.272, the 1.414, and the 1.618. So this is what I'm really looking at, like, okay, over here on September 20th, September 27th, and maybe October 7th, we may see some sort of a change in Bitcoin's direction. So if Bitcoin is going to create any sort of maybe a move up here over the next, let's say, week to that zone that I said it might run up to, then over the next week, if it starts to run up there over the next like 8 to 10 days, let's say, and it starts to come up here, and I'm looking for it to meet resistance, it may be a chance that that's where it pivots and starts to sell down at that. Because whatever direction, this doesn't happen all the time, but you see a lot of relationships with Fibonacci. If this thing's going to rally over the next 8 days or so up to those, test 50 again, then around this date, this 1.272 in time, it could pivot and come back down. And we may see something like that play where, it comes a little bit like this, and then not until around here we really see it kick off. It finishes the correction, the market structure, everything here looks balanced out, and then we start to come up into this level as we're starting to basically finish Mercury retrograde at the same time, and then the market creates the cup and handle, and then we run. All right. I know that might have gotten a little bit deep for some people talking about planets in there as well, but trust me, all of this balances on this: fear, greed, human emotion. Human emotion is what paints these charts. Okay, definitely what paints these charts. So just to finish it up with this, what I've been looking for this week, you guys can catch the same analysis on Swipecoin as well, and my DCX Go Live sessions during the week, but more or less on like the intraday, understanding this, what I'd be looking for now, and some sort of evidence that I would maybe want to buy this market, probably at this point after the weekly open, because you got to think about time too, right? Like, here's a weekly candle that we're in right now, right? In 5 hours, there's going to be a new weekly candle that starts. There's a really good chance that that weekly candle that starts right here, it's going to put some sort of a low in. It's going to put in a low. It's not just going to You know, look at all these weekly candles. Only this one, the breakout one, didn't even, it just had a small wick. But mostly all of these weekly candles, and historically too, like the weekly candles, they put in lows, right? So if you're looking at the charts on a Sunday afternoon, you might as well just wait until the next weekly candle opens and try to get the low of that candle, right? Just wait, just be patient. So that's what I'm doing here, right? I know that there's another weekly candle coming right here, and it's most likely going to put in a low and leave a wick behind if it's going to go up. So I want to buy that wick of tomorrow. Of basically, I want to buy the next candle's wick, that the low that it puts in, and that could be, you know, that candle opens at 6 o'clock my time. That candle could come 7 p.m. It could come 4 in the morning. It could come Monday. It could come Tuesday. We don't know, but what we do know is that's what we want, right? We don't want to buy now. We want to buy the low of the new weekly candle, and let this structure play out a little bit more and give us reason or some sort of evidence to, you know, to print some structure here. The first thing I can see right now would be on this hourly intraday that we had a lot of people trying to have support right here, right? And that support was resistance now over here. So now it looks like these lows back here are getting tested again. So it wouldn't surprise me at all if this, you know, wants to mess around in here and give some sort of sloppy structure like that, maybe create some sort of a trend right in there, and then here is where I'm looking for some sort of an entry 1 day and 4 hours from now, right? And another day from now, let it chop around here, let it put in that weekly low. At that point, the weekly low could be something like this, the next coming weekly low, right? This could come like this, come like this, and then come down like that, and then go like that. And then I'm just looking for more or less that low that gets put in there. All right. Basically about 45.5 at this point it should hold, which is these lows over here. If it's going to continue to show progression, which it probably will, because it's been chopping around here, and as we know that there's probably a chance it wants to try to retrace back up. So that retracement back up is probably forming right in here to run up sometime over the next week. And when you put in that Fibonacci time, okay, we could run into that up around these levels. All right, so I'm going to seal it up with that. Hopefully everybody had a good session, learned a little bit about Bitcoin, how I've been mastering it over the last couple of years, or actually it's been quite some time. But yeah, bought my first one in 2013, thought I was a genius, had to get drugged through it all to really understand how to trade it, what it is, and you know, how to get the most of it, and just realize that we are living in history right now. All right, so yeah, don't get you know, discouraged by the 20%, 15% pullbacks, right? Just remember there's a, you know, 18% pullback in just a few hours, right? That's the way Bitcoin works. You know, it got the over leveraged margin traders, and now it's reaccumulating. The whales are buying, the coins are shrinking up on the exchanges, people are holding longer, and there's a destiny to be fulfilled. All right. So hopefully we'll see you guys on Tuesday on my next session. If you guys don't already have DCX, I highly suggest you get it. It's the future. Everything from NFTs, DeFi, scalping, swinging, guys, we got it. We got you covered. All right. Blessings. We'll see you on the next one.
Hey guys, what's up? My name is Dave Pasquale. I want to thank everybody for taking a look at this video. Hopefully you got as much out of it as I did. Now, in my opinion, Crypto Picasso is one of the best analysts in Bitcoin that I've ever seen or heard. His analysis is usually spot on, and it's amazing the picture that he paints for you. Okay, so if you want to get mentored by people like us who've been trading for a while, as well as get the education and the alerts that are sent out from Picasso and 185 other educators that are on the same level that Picasso is, guys, get back with the person that introduced you to this video, okay? Find out how you can get the information on a daily basis, how you can get educated, and you can take your trading and your crypto results to the next level. Again, we do everything from scalping, intraday trading, swing trading, all the way to DeFi, where you can make hundreds of percentages of interest on your coins, as well as portfolio building. We have one of the best portfolio builders, two of the best portfolio builders that are in the market today. Okay, so again, get back with the person that introduced you. If you're looking at this for the first time and you just found it on YouTube, give me a text message. Shoot me a text message at 815-501-1381. My name is Dave, and say, hey, I just saw the Picasso video. I'm interested, and I'll get you information right away. Again, thank you so much. We appreciate your time. Have a great day and enjoy all the swings and all the profits in crypto. Thanks again, guys.